All right, today we're jumping into the technicals of a really interesting stock, LPTX. We're going to break down the charts, the signals, and what it all means so we can build a super clear picture of where it stands in the market right now. Okay, let's get right into it.
Okay, first things first. This is the number that sets the stage, 90. This is the overall technical score for LPTX. Think of it like a report card for the stock's technical health. And as you can probably guess, a score this high is telling us something very, very specific.
And what's that 90 telling us? Well, it's screaming an extremely bullish signal. A score of 90 out of 100 basically means that across the board, the technical landscape is pointing hard in one direction. It's a massive green flag, but our job, of course, is to dig in and find out why.
So, let's kick things off with that bullish verdict. You know, a strong signal is great, but smart analysis is always about weighing the potential upside against the potential downside. So, how does the risk and reward profile for LPTX actually stack up?
And this really lays out the trade-off perfectly, doesn't it? On one hand, you've got a risk-reward ratio of 1.250. That's a check in the favorable column. It suggests the potential reward is currently outweighing the risk. But on the other hand, look at that beta. At 1.485, that tells us this stock is almost 50% more volatile than the overall market. So yeah, you've got higher potential reward, but you're also signing up for a much bumpier ride.
And just to add another layer here, the stock isn't just popping up out of nowhere. It's trading in the top quarter of its 52-week price range. That reinforces this idea of strong, sustained momentum. It's not just a flash in the pan, it's performing near its best levels for the entire year.
Okay, so where's all this bullishness coming from? You know, with any big rally, you have to ask, what's the fuel? Is this real momentum, or is it just hot air? To figure that out, we have to look at the absolutely crucial relationship between a stock's price and its trading volume.
And wow, this chart right here tells a huge part of the story. Recent trading volume is a staggering 12.5 million shares. I mean, that's not a whisper, that's a roar of activity. And maybe even more important, we're seeing volume acceleration. That means interest isn't just high, it's actually growing. This tells us there's some serious conviction behind this rally.
Now, this kind of volume surge points to a really important concept in technical analysis, and that's accumulation. This isn't just random buying and selling. Accumulation is when investors, the big players, are systematically buying up shares and holding on to them because they believe the price is heading higher. It's a classic sign of smart money flowing into a stock.
So, what's the bottom line here? The data is showing massive accumulation. We're seeing indicators that track money flow at super high positive levels. This means we're not looking at some kind of volume trap, where a price spikes on weak volume and then just collapses. No, this rally appears to be the real deal with a solid foundation of buying underneath it.
Okay, so we've got the big picture, we've got the volume, now let's pop the hood and look at the dashboard lights, those specific technical indicators that give us an even deeper look into what's going on with the stock's momentum.
Just look at this table for a second. The current price, 2,050, isn't just a little above its recent moving averages, it is miles above them. The 5-day average is way down at 0.63, and the 20-day is even lower at 0.550. When you see a gap that wide, that's what traders call a parabolic move. The momentum here is just explosive.
Now let's look at the momentum signals. First up, the MACD. It's giving a clear, strong buy signal. But, and this is a big but, look at the RSI, the Relative Strength Index. It's at 85.5. Now for context, anything over 70 is considered overbought. So 85, that is deep in the red zone. It confirms the trend is incredibly powerful, but it's also waving a little yellow flag, warning us that this thing might be getting a little stretched.
And it's not just one or two things pointing this way. It's like a whole chorus of indicators are all singing the same bullish song. For instance, the ADX, which measures trend strength, is way up at a very strong 45.2. So basically, all the different tools in the toolbox are pointing in the same direction. That's a powerful consensus.
Okay, so we have all this data on what's happening now, but how do we use it to look ahead? Well, that's where technical analysis gives us a kind of roadmap for the next trading day, built around key price levels known as support and resistance. Let's check it out.
And this is really interesting. The stock closed the day at 2.050. It just so happens that's its exact calculated mathematical pivot point. Think of a pivot point as the center of gravity for the next day's trading. For it to land right on that number, it means the stock is perfectly balanced, like it's on a knife's edge, poised for a potentially big move.
So here's that roadmap I was talking about. It really is like a ladder. We're sitting on the middle rung right now, at that pivot point. Above us, you've got your resistance levels. Think of those as ceilings a price has to smash through. Below us, you have the support levels. Those are the floors that could catch the price if it starts to fall. These are the key battlegrounds to watch.
So based on that ladder, we can game out 3 potential scenarios, right? The bullish case. It gathers all that momentum we saw and breaks through that first resistance level at 2.150. The bearish case, that crazy overbought RSI we talked about finally kicks in, people start taking profits, and the price falls below that first support level at 1.950. And then there's the neutral case. The stock just takes a breath, it chills out, and trades sideways for a bit, letting things cool off after that insane run.
All right, we've looked at the volume, the indicators, the potential paths forward. Let's wrap this all up. What's the final takeaway when we weigh all that risk versus all that reward?
Okay, here it is in a nutshell. The outlook is extremely bullish. You've got the high technical score, you've got the massive volume and accumulation to back it up, and all the major indicators are in agreement. But, and there's always a but, you have to balance that against 2 very real caution points. 1, this stock is highly volatile, so expect big swings. And 2, that RSI is screaming overbought, which really raises the odds of a short-term pullback.
And that really brings us to the final question, doesn't it? There's that old saying in trading that trend is your friend. But when a trend gets this hot, this fast, you gotta ask yourself, is it still your friend ready to carry you higher? Or has it turned into a trap, just waiting to spring on anyone who shows up late to the party? Definitely something to think about. Thanks for tuning in.